Most people believe the main problem with Bitcoin is its price. They think it's too volatile, too unpredictable, or that they've missed their chance. But what if the problem isn't Bitcoin at all? What if the real challenge is us? For years, the conversation around Bitcoin has been dominated by its price. We see charts shooting up and crashing down. News headlines scream about new all-time highs or devastating corrections. This relentless focus on price creates a very specific narrative. It teaches us that success with Bitcoin is about timing the market perfectly. It makes us believe that if we just knew when to buy and when to sell, everything would be simple. We develop a deep-seated fear of loss, watching the value of our holdings fluctuate and feeling our anxiety rise and fall with it. This constant volatility makes it feel like an unsolvable puzzle where the price itself is the enemy we must defeat. But this is a misunderstanding. The price is just data. The real problem is our reaction to that data. It's human behavior. We are driven by powerful, ancient emotions that are not well suited for navigating a new and volatile asset class. The two most prominent are fear and greed. Fear makes us sell at the first sign of a downturn, locking in losses and regretting it later. Greed pushes us to buy when the price is skyrocketing, driven by a fear of missing out, often right before a correction. We are also deeply impatient. We live in a world of instant gratification, and we expect the same from our investments. When Bitcoin doesn't deliver incredible returns in a short period, we get frustrated and make impulsive decisions. These emotional reactions, not the price movements themselves, are what cause the most financial pain. This leads people to repeat the same mistakes over and over. The most common is panic selling. The market drops, fear takes over, and they sell often at the worst possible moment. The opposite is buying based on hype. They see a friend or a social media influencer talking about massive gains, and they jump in without any research, buying at a peak. They start following the loudest opinions online, confusing confident predictions with credible analysis. This leads to another mistake, confusing activity with intelligence. They feel the need to constantly be doing something, buying, selling, trading, switching wallets because they believe that being active means being smart. In reality, this constant churning is often just a reaction to emotional pressure, not a calculated strategy. It's a cycle fueled by emotion, not logic. So, if reacting is the problem, what is the solution? It's not about finding a better prediction model. It's about knowledge and preparation. Before anything else, it's crucial to understand the fundamentals. What is Bitcoin? How does it work on a basic level? Why was it created? Understanding its purpose and its technology helps build a foundation of conviction that is unshaken by short-term price swings. This naturally leads to long-term thinking. If you understand the potential of the network over a decade, the volatility of a single week becomes less significant. It's also vital to have a clear awareness of risk. Acknowledge that this is a new technology and that its value can go down. Never invest more than you are prepared to lose. This isn't a pessimistic view. It's a realistic one that protects you from making decisions based on fear. And finally, learn the basics of security. Understand how to store your Bitcoin safely. You don't need to be a technical expert, but knowing the fundamentals of self-custody is a critical part of being a responsible owner. Ultimately, navigating Bitcoin is a test of mindset, not a test of your ability to predict the future. Nobody can predict the price. Instead of trying, focus on what you can control, your own behavior. Bitcoin offers a unique opportunity to practice discipline. Sometimes the most intelligent decision you can make is to do nothing at all. To resist the urge to react to market noise, to sit back and to let your long-term strategy play out. It requires shifting from a mindset of constant reaction to one of calm, deliberate action. It means replacing emotional impulses with rational thought. Every price swing, every news cycle is an invitation to react. Choosing not to is a powerful decision. In the end, Bitcoin acts as a mirror. It doesn't have emotions, it doesn't have opinions, and it doesn't have an agenda. It simply reflects the behavior of the people who interact with it. The chaos, the fear, the greed, that's not Bitcoin. That's us. When you see the market in turmoil, you are not seeing an asset in crisis. You are seeing a global reflection of human psychology at work. The journey is not about mastering Bitcoin, it's about mastering yourself. Bitcoin without noise.